Well, there's definitely a oh shit price if I'm in a leverage trade.
Always.
Like usually the oh shit happens if the fundamentals start to swing, right? Sometimes these market events that happen where price action actually changes the fundamental. Like we saw that in the short squeeze in was it 2019 when price broke out of the $4,000 range and it just went all the way to 14. And it squeezed investors, and effectively it was well overvalued. But as it was running up so fast, investors started to get FOMO, and then we started to see the fundamentals started to conform to the price action, and it pulled the fundamentals up. And so, I mean, if you can create enough fear in the market, the fundamentals can change, and then I would go, oh shit, yeah. But luckily we're in the zone where as the price is going down, everyone's going, oh shit, and buying. And so like it's just like really juicy right now. And it's really great because crypto Twitter is full of bearishness.
It's like floating in the Dead Sea. There's so much salt. It's unbelievable.
It's like because I was tweeting bearish tweets after bearish tweets based on-chain analysis in 2018, the bear market of that, and they hated me, absolutely hated me. And now I'm doing bullish tweets, and they're hating it, saying it's going to 20. But it just says to me like, actually, the whole thing's flipped. Everyone wants to buy Bitcoin, but they want to buy it cheap, and they want the $20,000 Bitcoin price so they can buy it.
Those are the people who buy 50. Those are the people who buy 50. Those are the people who buy it at 50 on the way up when they're finally in disbelief. That's how markets work. I don't know if it's going to go up or down, but right. I don't know if it's going to go up or down, but I do know that when seemingly everyone wants to buy at a lower price, they all buy higher. That's just, you can see that in the history of markets everywhere, right? That's not unique to Bitcoin.
And it's interesting now because on-chain analysis is very widespread, and everyone's got access to the charts. And so people are posting very bearish on-chain analysis too. But I'd have you know that the on-chain analysis for the bearish stuff is fundamentally very bad analysis, and it's flawed analysis with major gaps and misunderstanding of what the data they're looking at is actually saying.
To that end, I'm actually curious. So obviously traders spoof and manipulate the market all the time. Manipulate because it's a free market and there's no rules against putting up a buy wall or sell wall. Can on-chain metrics be spoofed or manipulated by big players? Can they send a whole lot of coins to one wallet or another to make you as an on-chain analyst believe that something's happening that's not? Or would they?
Yeah, it's a lot harder to. It's not impervious, but there's different tiers of data. Like for example, you can spoof addresses. Like active addresses is very easy to spoof, and there's a high correlation to price historically to active addresses. But some of the very much more sophisticated data we've got now, like Glassnode do on-chain forensics to cluster all the addresses together and go, that is one person. And so you can't really easily spoof that. You can't fake being a million people. Literally, you need to fake being a million people to make a difference on the network. And that's very hard. That's a large amount of capital to deal with. The cost is prohibitive. You need probably a lot of development in wallets to be able to fake that kind of stuff. And even then, we'd look at the amount of capital you're throwing. So if you're trying to spoof that stuff, you better be worth like, 10, 20, 50, $100 billion.
Right, for it to be worth it.
Particularly... Yeah. Yeah, and also we filter out a lot of the stuff that's new. Like we want to look at the coins that have aged. So how can you, like those coins that were 5 years aged, moving between one participant to another, you can't fake that. Like you can have to wait 5 years before you try that scam again on the network. So it's very difficult to fake that the really good data. Like there's very rudimentary data that's given for free, but the really good stuff costs money. And that stuff is hard to fake, to get access to that data. And that's the data, I'm working with. And, all the stuff on Twitter is the cheap free stuff. And none of the people that have access to this higher tier of data is posting anything bearish.
Right. Which is very interesting. I saw you say that on Twitter, that basically if you have access to the good data, it's very hard to build a bearish case.
Yeah, it's very hard, and crypto Twitter's fortunate because there's a number of us. William Clemente is also tweeting at that tier of data. I do a bit of it, I try not to tweet too much these days because I'm just sick of like the the BS trolling.
Yeah.
So forget it. Like, meant to be a service, guys, but forget it.
A voluntary beating is not really high on my list of fun things to do. I also tweet less for the very same reason. I mean,
yeah, exactly.
but
So,
I'm curious. You talk about obviously like 5-year-old coins being moved in a large tranche, something that you wouldn't be able to fake, but also to what end would you even try? I'm curious, when you see things like that, how easy is it to identify whether perhaps that's an OTC deal, or is it perhaps just somebody changing their custody or security? How do you know why these coins are moving?
yeah, that's a hugely good question. It's like when you see that, you'll see it in one-dimensional network. So you will see it in, say, like dormancy or the destruction of coin. We call it destruction, very much the aging, the fine wine aging of these coins and wallets. Right. As they just get destroyed, they age. You go, oh, there's a blip here. But then, of course, no one chart is the holy grail. You need to look at, we have like 400 or 500 charts of the network, and you'll go, well, this could mean A, B, or C. So it's a process elimination. So if it's OTC, you will go to the OTC chart, and because we're tracing that, right, you can say there's some amount of data showing what's happening on OTC desks, and so forth. Like there's like, for example, someone posted like the wallets of 1,000 bitcoins or higher is they're reducing, meaning whales are selling. Well, it doesn't mean whales are selling. It could be wallet consolidation. It could be a number of things. So then you need to track how much is, is it exchange balances? Because they're the biggest whales out there, which is Binance. They'll look on. They hold the most wallets of over 1,000 bitcoins. Is it supply shock? Is it actually everyone's buying coins and taking it off Binance into cold storage because they're stacking hard? That's bullish. It's not bearish. That whales are
right.
So you need to look at all these dimensions, and once you have the good data and you look at all the different possibilities and eliminate them, then you can ascertain what is happening in the network with much higher probability than just, it's kind of a guess with past correlations. Like right now, active addresses dropping through the floor, which is correlated to price, right? When you see this thing dropping to the floor, it's been fuel for a lot of bearish people because it's like, there's no activity. That means that the network's not growing. Actually, what's actually happened is we've had 2 rounds of miners shut down. And so the blocks are being processed at 1/3 of the rate. So obviously the activity in the addresses has to go to 1/3 of the rate because they can't process at the same speed. So when you have to take that into account. So there's all these sort of things you need to know about the network when you're going to do analysis. So